Welcome. In this video, I would like to demystify the difficult topic that is target costing. Target costing resides in the Specialist Management Accounting Techniques section of the Performance Management syllabus. In this video, let's do three things together. First, let's break down the topic. I'll show you what it's all about. Secondly, let's do a practice example together. And finally, we'll do a past exam question together. All of this you can find in the Study Hub. To understand target costing, we have to go back in time to the quote-unquote traditional era. This is roughly the 1970s and earlier. Back in this era, cost plus pricing was a predominant tool for companies to use when they were setting a price for their products. Let me take you through this. Under this traditional approach to cost plus pricing, first step would be to understand the cost per unit of our product in a manufacturing environment. That job would often fall on the shoulders of the management accountant. The management accountant would estimate the direct materials, the direct labor, with help from others in the organization, and set a standard cost. So a cost per unit is set. Secondly, a predetermined markup would be applied to that cost, 10%, 20%, 25%. And lastly, we would then arrive at the price at which we would sell our products. Looking back at this approach, we can now see a big drawback. This process of setting the price was 100% internal. We didn't look outside of our company. We didn't look at the needs of our customers. We didn't try to understand what the competitors are charging. So we don't know the demand. We don't know where our price is going to sit in the marketplace. Let's move to target costing now. Target costing, a modern approach that recognizes that the price of a product will be set by the market in a competitive market. So the company will have to accept that market price. And let's look at how target costing works in comparison to cost plus pricing. If we're following a target costing approach, the first step will actually be to set the price of our product. And that won't be an accountant's task. That will be done by the marketing department, hopefully during the product development phase. Let's understand what features of our product our customers value. Let's investigate the market, and let's set a price that positions us in the market where we want to be, that will hopefully hit our demand targets as well. The second step under target costing is to then determine the profit. And that will be based on the desired profit margin that we would like to achieve from our price. A company will have a cost of capital, investors, and investors will require a certain profit margin from the revenue of the company. Now that we understand the price and the profit, the cost is actually, or the target cost is the last step, and that becomes a balancing figure. The target cost then becomes the objective for the production department. Can they produce at that target cost per unit? There are two more steps that you should be aware of in the grand scheme of target costing. After we understand the product's target cost, we can then go back to the management accountant and we could get the expected cost per unit. And hopefully we're in the design stage, so we could estimate the product cost on paper. And once we understand the expected cost per unit, we could then calculate a cost gap. And that would be the difference between the target cost and the expected cost per unit. And that becomes a cost reduction target for the production department. So imagine the cost per unit is $10 and the target cost is $9. We would have a cost gap of $1. So the production department would try to find cost savings of $1 without harming the quality of the product. Now that you understand how target costing works, let us try activity 1 from the study hub together. And just to look at exam technique, we always read the requirement first. And we see that the requirement is to calculate the target cost of one product. So before I do anything, I can recall the pro forma or the template. And step 1 will be that price. Step 2 will be the profit. And step 3 will be the target cost. I'll abbreviate that TC for target cost. Now that we have a template, we understand the information we've got to find. Let's read the little story. We have a company, and they are designing a new version of their luxury car, the Z123. They'll launch it next year. It's going to have a life cycle 10 years. And the production of the car will require a $3 billion investment. And the company needs to make a profit of 20% per year on this investment. And marketing department believes the car could be sold for $40,000 each, and they're going to sell 100,000 cars every year. So with that information, we can get busy. Now, first step is the price. And we have to make a decision now. We could work at the unit level, or we could work at an annual level, and when we're all done, we could divide by 100,000. I'll do this example looking at the price, target cost, and profit at the unit level. First piece of information we need is the price. We've got a price set by the marketing department of $40,000. So step 1 is done for us. Step 2, we need to get the profit per unit. So they're going to invest $3 billion, and every year we'll need to make 20% on the $3 billion, and we're going to produce 100,000 cars per year. So then we divide that annual profit by the number of cars. So that will be 3 billion. That's a lot of zeros, isn't it? Multiplied by 0.2 divided by 100,000. And that comes to $6,000 profit per car. So the last step, the target cost, would be the balancing figure between those two numbers, and that is $34,000. That is the target cost for the Z123. 2, 3. Now that you understand the concept of target costing, you know how the numbers work, let's try a past exam question that you can find in the practice section of the Study Hub. I've got the question right here on the screen, so you could pause the video and try this question on your own before I take you through it. Let's do the question together. Step 1. Always read the requirement, and we see once again that we need to calculate a product level target cost. So I'm going to use the same template or pro forma. Step 1, let's get a price. Step 2, let's get a profit. And step 3, we can get a target cost, TC there, as an abbreviation. Now that we know what we're looking for, let's read the story together. The selling price of product X is set at $550 for each unit. Ooh, that's going to be very useful. Sales for the coming year are expected to be 800 units. And the required return is 30% on the investment of $500,000 in the coming year. So we can use the same approach. And did they give us a selling price? Yes, they did. $550. Let's plug that right into our template. Do we know the profit per unit? Well, we can work that out, and the numbers are more manageable in this example. We need 30% on $500,000 in the coming year. That's the total profit. But if we get to the unit level, we've got to divide that then by 800 units. So that would be $500,000 times 30%, 0.3, divided by 800 units. And that comes to 187.5. So the last step is the balancing figure there, the target cost. And that comes to 362.5. So, ladies and gentlemen, the answer is D. Target costing isn't actually that difficult when you understand the template and when you've practiced some exam questions and examples. Performance management students, there you have it. That is target costing.